Where do you guys at Energy Aspects see global oil supply and demand shaping up right now?
Well, I think the biggest thing on the horizon is definitely the Iran sanctions. We think that by the end of this year, Iranian exports are going to have fallen by about 1.5 million barrels a day. And that's a huge loss for a market that, as Jackie said, is much more evenly balanced. It's already in a bit of a deficit. You take that much oil out. Now, OPEC and Russia, they're already beginning to increase their production in advance of that. That's put more crude onto the market now, but it means it's not going to be sufficient to offset the disruption entirely when we come to year end. Similarly, we see demand holding up well. There was a weak patch earlier in Q2, but we definitely don't think that demand is really struggling, and we think it'll be decent from here. So balances look very tight as we get towards the end of the year, but we've definitely had just a short period of weakness with more OPEC supply before Iranian production starts to fall. And I think that sent some nervousness through the market and through traders.
Sounds to me, Richard, like you are suggesting that the amount of oil that is currently in the world right now is a temporary push and demand is going to remain strong. So correct me if I'm wrong, you're making a case for higher oil prices.
That's absolutely right. We definitely see oil prices resuming that upward trend as we get into Q4 and through 2019. And I think Jackie's point that if you have geopolitical disruptions on top of the ones we know about, that absolutely sets us up for a spike, because we're simply not seeing enough investment in new production to offset the declines, that growth in global oil demand, and the disruptions that we're already seeing, plus the disruptions that are coming down the line in the form of Iranian sanctions.